Okay, good morning and good afternoon, ladies and gentlemen. Would like to welcome you all to the Financial Regulatory Authority webinar. We are very pleased to have with us today Dr. Mohammed Umran, the Chairman of the Financial Regulatory Authority. We have also with us today Dr. Islam Azzam, Deputy Chairman for Financial Regulatory Authority. Thank you so much for your time and for joining us today. As per Dr. Umran's instructions, he will be happy to take your questions directly. If you have a question, you can either type your question using the Q&A tab at the bottom of the Zoom screen, or you can raise your hand so I can open up your line and you can ask your question directly. So we are waiting for your questions. Okay, the first question comes from Mr. Anas Qasim of Ajij Capital. Mr. Anas, your line is open.
Hi, good afternoon. Thank you, Badwa, and Faraz for arranging this. Dr. Amran, thank you for making the call. I get my first question, I guess, and what myself and my team and our team here at Ajij really would like to raise as a concern with the Egyptian market pertains to a series of recent FRA decisions regarding cancellation of trades. Now, for us, in our mind, at least as investors, regulators stepping in to cancel trades should be an exception rather than a rule, and it seems to have become the MO of the FRA and the EGX in recent months and years. And what's even more concerning is the fact that some of these cancellations have taken place either on month end, close to month end, on MSCI inclusion days for MSCI constituents. And as institutional international investors, this makes allocating to Egypt, this is a flag in general for allocating to any market, let alone a market which for, let's say, the big money out there in terms of gems, is, for lack of better wording, a rounding error. So I guess my question is, what's the thought process behind that? And can we expect more of the same, or will there be changes on that front and an actual actions taken by the FRA where there's recourse to market manipulation, market churn, pump and dump schemes, whatever you've been seeing that have, instigated the actions for cancellation rather than simply cancelling and implicit condoning of the actual actions that have would be questionable otherwise?
Thank you, Anas, for your question, and it's given me my pleasure to be with the group of investors who are you hear me now? Because I did turn my phone off and then I did open the Wi-Fi because some phone calls start to come to me when I did turn it on my phone. So am I clear now?
Yes.
Okay. Thank you, Anas, for that. As you mentioned, yeah, the difficult decision for a regulator to take is to cancel a trade. However, as you might understand, we have different kind of stocks in the stock market. Some of them, they are blue chips companies in EGX 30. Other of them, they are very much concentrated in retail kind of trading. I can hardly recall that FRA did cancel a transaction on a certain stock that is one of the blue chips companies. However, in some cases,
Eastern Tobacco.
Sorry?
Eastern Tobacco. On MSCI inclusion day.
Right. I'm not aware myself as a FRA chairman, that I did cancel a trade in Esther Tobacco, might be the Egyptian exchange. And of course, they might have a reason behind that. I don't know when it's happened, but as a regulatory authority, I do not recall that myself as a FRA regulator that I did cancel a trade. But in any way, we have rules and regulation that is built over exactly in which circumstances, whether the Egyptian exchange or the FRA should intervene to cancel a transaction, a certain transaction, or the entire day. It depends when if a new information did come to the market and there was a prior kind of transaction that based on asymmetric information, here the regulator is taking an action. So in reality, as he was mentioning, the specific rules is that it left to the market dynamics unless we did discover that some sort of manipulation happened or some asymmetric information in which some people understanding or they have a prior knowledge about a certain data or information, and after a while it appears in the market after 1 hour or two whatsoever. So just to make sure that we have a fairness in trading among all investors, then the FRA or the AGX, according to the situation, they take an action. But I would like to assure you that it is not the norm, and it is one of the hardest decisions that a regulator will take, because we always believe in the market dynamic. By the end of the day, it's a market. But if I discover that there are some investors take advantage on expense of others because they know prior information, here I have to intervene. Remember that the Financial Regulatory Authority is about the protection of investors, especially the minority protection. And I just would like to give you a piece of information according to the Doing Business Reform. Doing Business Report, 5 years ago, back in 2015, the ranking of Egypt, we were number 139. Now in the minority protection, we are number 57. In terms of disclosure and transparency, Egypt is above the average of Middle East. Egypt is above the average of OECD in terms of minority protection, in terms of disclosure, in terms of transparency. So what I would like to make sure about it is that we are quite keen about the soundness and the stability of the non-bank financial institution, including the capital market, and we are limiting our intervention to the last minute when we do not have anything to do but to intervene in the market.
Thank you for that answer. I'll just revert and on the point of minority protection more than anything else, in that, especially with some of the names where you have seen cancellation of trades, and by the way, this is not something that has hurt us as a firm ourselves at all, in fact. So we've been fortunate not to be dragged into this. However, from a minority action or a minority protection standpoint, I would say the ones that have been hurt the most are those who were able to exit, whether fortuitously or not, on a particular day, and then had that particular decision reversed, triggering margin calls, triggering forced sales of the rest of their portfolio, whatever it may be, people who frankly couldn't afford to do so. And that's highly concerning for a market regulator to take actions like that, frankly, with that little foresight to what the impact could be to minority shareholders. So again, I understand the impetus perhaps, but it's really rather concerning that these actions are being taken whilst at the same time there is no recourse to the manipulators themselves. If there was manipulation or there was an asymmetric information that was disseminated in a manner that was intentionally malicious, then what's the recourse for those particular parties? You know, by not freezing accounts, by not sending people to jail or banning them from the market, you're implicitly condoning their actions by simply canceling trades.
Yeah, you are quite right. In many cases, we have done that, in which, according to the regulation, I have the right as the chairman of the regulatory authority to do this action. Sometimes I do freeze their account in many cases. But again, if you look to see many of the incidents that you are talking about a bunch of stocks that really has a question about it. I mean, but the majority of listed companies in the stock exchange, if we make some sort of statistics, We have more than 100, 240 listed companies. We have more than 100, 244 trading days. We have more than 4.5 hours trading every day, multiplied by 244 days. Just trying to figure out how many times this has been done, to which stocks and to which investors. So this is a very clear issue. But to generalize about the behavior of the regulatory authority or the EGX, I think it is not that fair enough. But we need to understand that in some cases, we have a specific number of stocks that we need to put an eye on them, and that any action is taken by the regulator or the stock exchange, the main trigger for that is again to protect investors. You are right, and you understand, especially in the capital market, for the crime issue is very hard to be addressed, is very hard to prove it. But in any cases, you have some sort of suspicion behavior in which you have to take action about that. I mean, I do not say that this is the best way to do, but in many cases, we left with a single decision, but to intervene in the market. I completely do not believe in intervening in the market. And if you look to the previous years, I mean, it is very hard for me to remember cases that we canceled trading in EGX 30, for example, blue chips companies. You were mentioning the Airtel Tobacco might be because of the news just happening to the market and nobody knows about it, but some investor, they really know about it, and this is why might be the EGX, they take a decision to cancel a trade. But in reality, it is very hard to manipulate blue chips companies. But sometimes it is easier for you to do that with a very small stocks in which the regulator take action on that. But again, I would like to assure you, it is the best for the regulator, the best for the market is just to keep watching the market without any sort of intervention. However, as a last resort, we have to do that.
Okay, well, thank you very much, Dr. Umran.
Okay, thank you. Next question comes from Mr. Faisal Wori. Your line is now open.
Hi, thank you, Radwa, for doing this. Dr. Umran, very nice to speak with you. Thank you for making the time to speak with us. I think Anas kind of hit on kind of all of the right points. I think there are kind of one or two additional ones that I would like to make. Just to kind of share our kind of greater emphasis on this. You know, the reality now is that Egypt is, if I recall correctly, 7 basis points with an MSCI EM. It is, you know, the second smallest market, only in ahead of Pakistan within the MSCI Emerging Markets Index. I think as, you know, kind of investors within kind of broader emerging markets and frontier markets, I think the challenge for us, frankly, has been, you know, in a variety of different manners, Egypt is slowly, you know, sleepwalking its way towards becoming uninvestable. And as you mentioned, you know, kind of canceling trade should be the last course of recall, but it seems to have been done with increasing frequency within Egypt. And so my question really is, you know, instead of using the ability to cancel trades, why not go after whoever the actual parties are who are alleged to have traded on whatever kind of proprietary information or market moving information, as opposed to canceling trades, one. Two, I think the challenge, and Anas mentioned, you know, there have been 2 stocks. I was hoping that you could give us some greater clarity on each one. One was Eastern Tobacco, where trades were canceled right before its MSCI inclusion. As far as I know, there was no, quote, market moving information there. And the second one, obviously, is Speed Medical. If you could help us understand why you canceled both of those trades in both of those stocks would be helpful. And third, if I could just again emphasize, over the last, I would say, quarter to 2 quarters, we have seen regulatory intervention in companies like CIB, where the chairman was removed. We have seen regulatory interventions in names like Johanna, where obviously the CEO is under some sort of detention. We have seen this in a variety of companies in Egypt. And that situation, frankly, has been exacerbated by the FRA in canceling trades, in which, frankly, over the last 2 months, we have not seen this happen in any other country. And so despite the fact that your rankings with whatever OECD index may be higher, the reality is that the situation for those of us that are on the ground investing in Egypt, it's getting worse. And we feel like we're frankly being frog boiled, step by step. And, each one of these things can be remedied, but I just wanted to make it clear the actions that have been taken by the FRA are making it harder for foreign investors to invest in Egypt, which should reflect negatively overall in terms of making Egypt a friendlier place to invest.
Okay,
I'll stop there.
I'm not sure when you keep talking about cancellation, if I can remember well, I need to come back to you with the statistics, because I do not like the words of, like if it's we are doing that every day or every week. First of all, I need to come with the statistics. How many times did we cancel the trading? And more importantly, in which stocks? Because yes, we sometimes cancel, but I do not think that the most of the time that we cancel trading on stocks is the stocks that really do attract investors. You mentioned several cases, and I will answer you about it. But apart from the Speed Medical that you are talking about now and Ester Tobacco, I do not recall that any of the EGX 30 has witnessed any cancellation. So just I would like to be very clear about it. Don't talk with me about certain stocks that we all know inside Egypt here, whether they have some sort of manipulation or not. You do not know about it, but we do know. And I know that the majority of not all institutional investors, they do not invest in such kind of stocks. So do not try to generalize if we are dealing with certain stocks because of certain people, they can control the prices and manipulating that because they are very small free float or very small market capitalization of this company. This is one story. But the other story is that we should talk about the stocks that do attract the institutional investor and the impact on that on attracting foreigners to invest in the Egyptian market, as well as the impact of that of the weight of Egypt in the NSCI. So for the Ester Tobacco, I'm sorry I cannot answer you now, but I'll get you the answer. I need to talk to the EGX, understand why and when and how they cancel the things. As for Speed Medical, very good question. Before you ask the regulator why you did cancel that, you have to ask what happened first. What happened actually is that the Speed Medical with other companies, there's some sort of merge and they will have a capital increase by the fair value between these two companies. And this has been approved in the General Assembly. And then there was an independent financial advisor is doing his job, and without, I'm saying again, come back to the Financial Regulatory Authority to make sure that the fair value is done according to the rules and the regulation done by the Financial Regulatory Authority. We did find all of a sudden that the Speed Medical itself and its management is putting the IFA in the screen of the Egyptian exchange without getting prior approval from the Financial Regulatory Authority, saying that they are rejecting the fair value without consulting us. This is the reason why, as a Financial Regulatory Authority, we did decide to cancel the trade, because they go to the stock market, putting the press release, and they are against our rules. Is that the independent financial advisor should be first get some sort of co-understanding with the Financial Regulatory Authority to understand it's done according to the rules and the regulation, and they should have consulting us before that. Instead, they went as a management to the EGX and they just put the press release, and then they're asking us, okay, we have done our job. No, they did not do your job. And this is why we have to intervene in this case and to cancel the trade, because until now, even we just get the result and we still trying to understand in which capacity and understanding and approach this fair value has been done to make sure this is done according to the rules and the regulation or not. So actually the one who should be blamed is not the FRA who intervened to cancel, but the company management itself who did make something wrong against our rules and regulation and send a press release without consulting the FRA. As for the Eastern Tobacco, I'm sorry, I have to again to ask the EGX what's happened and what is the reason, and I promise you to send you everything why this has been taking place.
Sure. Let me just kind of respond. I think to some of the points that you made. You know, Dr. Imran, I'm not a regulator. I'm sure your job must be very difficult, and sometimes there are probably unforeseen consequences in terms of trying to set a level playing ground. I would suggest that there are alternative means to perhaps, you know, regulating this issue with Speed Medical, for example, rather than canceling trades because they issued a press release through the EGX. One of these unintended consequences of canceling trades has been that it's making it harder for foreign investors to invest in Egypt when they are uncertain as to what will prompt the FRA to cancel any trade on any particular day.
But Faisal, just a second. If you issue a press release that is not consistent with the reality, and people investors did trade on this information, and it has been proved this information is wrong, is not accurate, should I leave it or should I cancel the trade if you are a regulator?
Sure. I would suggest that if the trades were to happen on day one, once the information, the newer information is available, it would get resolved on day two and the markets would do their job. I think the challenge is...
But those people, Faisal, that who did trade the stock on this information that is not accurate, should I leave them continue like this?
Sir, let me give you an example. Sure. Let me give you an example.
It might be, but from my point of view as a regulator, that is my first priority.
Let me give you an example. Let me give you an example. Right?
May I add something in the Speed Medical case? May I add something in the medical case? Just a small info. Actually, in the case of the Speed Medical, what was published as a fair value is completely different than the report we received at the FRA, actually. And when we asked the company what's going on, why your valuation report is different than what you submitted officially for the FRA, they told us, we are sorry, it was a mistake, and we're going to punish the one who did it.
Okay. So to answer your question, sir, within the US, there's information that's reported all the time, right? Or misreported all the time, whether it's in a newspaper or a story that, you know, leaks on Bloomberg, etc., where people end up trading on it. As far as I know, and I've been doing this a long time, the New York Stock Exchange or the NASDAQ doesn't decide to cancel trades because people traded on whatever information they had available at that time. That is the risk that the market participant takes.
Right.
So the fact that you are intervening in real time, I think, is making the marketplace simply not function in the manner in which it was supposed to. Now, if you believe in markets, you should allow them to function in a way that they would self-regulate, right? Obviously, take out whatever the bad actors are, but canceling trades in the manner in which it was done, and the fact that, you know, Eastern Tobacco, were 3 days before it's supposed to go into the MSCI inclusion, the trades are canceled, and the fact that that you cannot speak to why that happened is obviously concerning to everybody who's listening to this call.
Actually, Eastern Tobacco, the reason for this was there was info that the government will give new license to new tobacco companies, and it was not actually. That's what I mean. The stock exchange canceled for this reason, because it was not. There is information that there will be a new licensing for a new tobacco companies, and it was not published, and some people use this insider information.
So shouldn't you hold the government accountable for that? Aren't you the government?
No, because it was not published, and some people use this as insider information.
As far as I understand, it was published in government newspapers, and again, as far as I understand, you know, there are no real independent newspapers in Egypt.
Yeah, you are right. Okay, I think one of our mandate is to understand who is behind that, and if you find something, we have to do it from the legal point of view. We have to do it, but this is not the question now. The question you asked, asking why you are canceling. You are questioning my ability that the FRA sometimes has to intervene, because we did find that some people did trade stocks based on and accurate information. In this case, you believe, of course, I know many markets, they do not care about this is because this is a very much mature market and very big market, they do that. So they leave it to go. But in many other emerging markets, in reality, there's a big difference between to intervene and to make some sort of disruption in the market and to intervene and to restore confidence in the market. In my view as a regulator, I'm saying that when people are trading on wrong information, and if there's a time to correct that and cancel the trade, I do that. In many other cases, we find an accurate information, but it has been like a week ago or 5 days ago or a month ago. Of course, we do not intervene in this case. We take a legal action. But if it is still in your hand that during the session itself that you can intervene and you do not intervene, and you know that people buy and sell based on a wrong information, I do not think as a regulator that I should leave it go. And it is one of our mandate by the Constitution and by the law is to make sure that there is fair trading and nobody is using insider information, which is a wrong or an accurate one. But as long as it's an insider information and it's still in my hand, I have to intervene in this case.
So I would just say, I don't think anybody is faulting you for doing your job as a regulator. I think we appreciate the fact that there is a kind of regulator within Egypt that is looking and at each trade at these companies and is concerned that the market is fair and equal for all market participants. I think that is great. But to your point, I think one of the and nobody's questioning your ability to intervene. I think the point that I am trying to emphasize is that the unintended consequence of canceling trades, however noble the intention, is that it is making it a harder place for foreign investors to continue investing in Egypt. And it will make it in an environment where there are already regulatory actions happening in a variety of companies. It introduces greater uncertainty, which is stock specific. And then secondly, as a result of that, makes Egypt more uninvestable, which I think is probably the last thing that you'd want. I'll stop here. And if any of my colleagues, virtually around this table who disagree that, somehow canceling trades is a good idea, I'll let them, speak for themselves, and I'll pause here. Thank you.
I think we are not going to spend the half of the entire conference talk about the ability or the questioning the role of the regulatory authority to make sure about the soundness and stability of the capital market in Egypt. I think we have many other issues to discuss about how to deepen the market, how to attract institutional investors, how to have more companies to be listed in the stock market. So I do not think that we're going to spend half of the day here about the cancellation and about the intervention from the financial.
But this is my point, sir. As a result of this, it is making it harder for the EGX to attract foreign capital. This is exactly the point that I'm making.
Point well taken.
Okay, thank you, Mr. Faisal. Would like to remind our participants, if you have a question, please raise your hand so I can open up your line for the discussion with Dr. Umran, or you can please type your question using the Q&A tab at the bottom of the Zoom screen. Until we get more hands, Dr. Umran, we had received some written questions from DWS Investments, and I would like to share them with you. It's a question about how does the FRA intend to strengthen institutional ownership of shares, since they find that the low institutional investor participation lowers the professional investment appeal of the Egyptian exchange and the stability of trading in the Egyptian exchange in general. So how does FRA intend to raise institutional participation versus retail?
Yeah, you are quite right. I think this is one of the problem in the market about the ownership structure of the listed companies. Normally speaking, you would find that institutional investors in a more mature market, they are more or less dominating the market. And this is back to the question before about the decision sometimes taken by the FRA about the intervention in the market because of the heavy trading by retail. I think if the market with the upside down, that the majority of the trading in the stock market are institutions, I do not think that will find such kind of intervention from the FRA, and the reality is that most of the companies that are controlled or dominated by institutional investors is very, very hard to find any sort of manipulation or even an accurate information in the market. So the reality, of course, it is of interest to the FRA to bring more institution to the market. We are trying to do that based on different different steps. Actually, first, we still in a very strong contact and discussion with the government to convince them to float SOEs to the market. We had a meeting with the Prime Minister, and we have a ministerial the economic ministerial meeting with the governor of the central bank, with the Prime Minister, Minister of Finance, Minister of Planning. I did present to them a paper about the steps to strengthen the market further by providing more supply side to the market. And I think the government in the process now to see one of the very early IPO to the market, sometimes in the like I would say that the second or third quarter of this fiscal year. So I'm talking might be sometimes after June, July, something like that. But the reality is that if you go back to the 1993, 94, 95, 96, is that the performance of the stock exchange in Egypt at that time was due to the very aggressive privatization program. I still remember when I was doing my paper about the underpricing of IPO in the Egyptian stock markets that has been published in Journal of Financial Research, is that we're talking about a clear schedule for how many companies, for how many months. That was very clear, and I made it very clear to the government that if we would like to revive further the stock market, we need to feed the market with heavyweight companies to be listed in the stock market. I mean, you understand that just before the COVID-19, we were very close to have Bank Educare to be listed and traded in April last year in 2020 before we hit by the corona. So I think the government realized carefully now that it's a time to start again the privatization program. In Egypt, we had last week we have Talim, the educational company that has been listed in the stock market, and I think we have the IDH, which is a heavyweight. We talk about market capitalization of 10 billion. It's a cross listing between London Stock Exchange and the Egyptian Exchange. And I'm expecting that the government will start, especially after Ramadan, especially this holidays, that will be an aggressive movement to list many companies in the stock market. So I believe this is a very important issue. The second thing, I think my vice chairman was have several meetings with asset management, with investment banks, as well as with a different investor talking about the fixed income market. And I think the FRA did issue a decree, the board of directors a few days ago, to allow at least every bond issuance, they should have 10% for them to be traded in the secondary market. So we're trying actually to look how the fixed income is working. I think the Central Bank of Egypt, as well as the Egyptian Exchange, is working about a scheme to allow for the sovereign bonds to be actively traded through over the counter in the Egyptian Exchange. So you need to expand the trading, not to be limited only to the stocks, but also to have a fixed income. The third thing, and I guess Dr. Azam is trying to work on that, is about the derivative exchange. I think we're still in a very, very early stage. We did find all the rules and regulation, but we need to have the execution processes that can take between 2 to 3 years to have this in Egypt, but we do start about that. So we are trying to provide the financial tools to be available here in the market, so that can help to bring more and more institutional investors to take part of the activities here in the capital market in Egypt.
Thank you. I just would like to add, like, I think we need the listings, like you've mentioned, to be of larger market caps. Also, when I look at the rules of inclusion into an index like MSCI Emerging Market Index, and I think that's a concern by our investors also, the number of stocks eligible to enter the free float. I mean, you've mentioned that we have around more than 200 stocks listed, but honestly, when I come to scan them or when I come to talk about foreign institutional investors, the real number that might be investable to them is around 20, unfortunately.
That's correct.
So I'm not sure, maybe the 5% is not enough. Maybe we need to raise the 5% minimum free float, the size of the listing, the allocation to institutional investors also needs to be looked at. Just
Radwa, listen, according to the rules, it is not 5%. The minimum free float now for the IPO newly listed companies is 25%. And I really recall in the last 4 or 5 IPOs, of course, including the recent one, but then before, because we did not have any IPO in 2020, but in 2019, 2018, I think most of the companies were floating around 49% of their paid capital. So in reality, according to the listing rules that has been approved by the board of directors when I was a chairman of the FRA like a couple of years ago or something in 2018, 3 years ago, we bought a minimum of 25% as a free float. So in a sense, you are right. It's about how to bring more blue chips companies to increase the weight of Egypt in MSCI. So we need more companies like the CIB, like Fawri, like FGRBS, whatever it is. So I think this will not come unless the government is really start to take a very aggressive action to list heavyweight companies, like what Saudi Arabia did when they put Aramco in the market. You look to how the market cap has in Saudi Arabia, it becomes the 9th in terms of the biggest market cap all over the world, and you look to the liquidity there. Of course, I cannot compare the economy of Egypt with the economy of Saudi Arabia, but at least we need to have a lesson is that we need to start with a series of heavyweight companies to be listed in the stock market. We have banks, we have insurance companies. I do understand the Minister of State-owned enterprise were talking about putting Masr Life in the stock market. We were talking about a couple of companies from the petroleum sector to be in the stock market. We are talking about the bank to care as one of the big potential company to be listed. So the reality is that we do really need blue chips companies to be listed in the stock market, and this is the message that I always give to the government in any meeting I have. And I really appreciate it if investors themselves they talk to the government, because they are owner. The state owns the state assets, and they will be the biggest supplier to the companies that should be listed in the stock market.
Yes, but also I'm thinking about not only the government privatization program, maybe the private sector as well needs to have enough incentives for big companies to list.
I think it's like a spillover effect. I mean, sometimes the private sector is shy to take a very aggressive action, but when they see the government is moving forward in an aggressive manner to the stock market, then they will follow after that. This is like a spillover effect that we need. But in reality, what I have seen in the last few years is that the private sector, when they find that the conditions are available and they do take advantage of what's happening in the market. I hope that after this difficult year for the capital market in Egypt, is that we start to have the right path, and that the government will really take a great action about having many blue chips companies to be in the stock market as well as the private sector.
Sure. We have a new question from Mr. Faisal Ghouri. Please go ahead.
Thank you, Radwa. I think it's great that you're focused on kind of blue chips, including kind of increasing the inclusion to MSCI. I think Radwa kind of made the correct point. I think on behalf of investors, I think the challenge is oftentimes we see things from the vantage point of from wherever we are sitting at the table, and as foreign investors in Egypt that are not physically based in Cairo, I think oftentimes the reality is, one, there are a very small number of companies in Egypt today that are investable for foreign institutional investors that, you know, trade above $1 million a day. Over the last 2 quarters, we have seen, generally through government regulatory behavior, that universe has become harder to invest in. And so while you are pushing for more companies to list in Egypt, having gone through the, you know, Talim IPO just now, I can tell you that IPO almost got bungled by a kind of bureaucratic error. The macro IPO was undersubscribed. And so it shouldn't be surprising that in an environment where these types of things are happening in Egypt, where the regulatory environment seems to be changing, and everybody from their particular perspective within the regulatory apparatus only has a sense of what they are doing and not maybe what is happening within the newspapers or other organs within the government. I think as investors who bear the brunt of price actions, which the market reflects, all of this, it has made it harder. So while you are pushing for greater inclusion within MSCI-EM, more stocks, I would say that needs to be balanced by the shorter term decisions that you're taking that seem to, quite frankly, be antithetical to the goals that you have set. And I'll stop there.
Thank you. Next point is, how does the regulator see the excessive margin lending, and which raises obviously the volatility in Egypt more than other emerging and frontier markets? What are the steps being taken to control the impact of high margin trading on the market and its volatility? And also, are we looking at how to incentivize maybe the pension system to invest in local equities, being a long-term, more stable kind of investor?
Radwa, I think that the margin trading is not, in reality, is a big quantity in the market. The problem is that is about the distribution of the margin trading. I mean, in reality, the highest margin trading we have seen around 6.5 billion Egyptian pound, which is more or less around 1% of the market cap of the Egyptian exchange. The problem is that the number of people they have a margin account is around 8,900 or 8,800. But the reality is as follows, and this is again is not about to intervene in the market, it's about to regulate the market. And there's a big difference between that you are intervening in the market, you are regulating the market. 99% of this 6.5 billion, sorry, 99% of those 8,900 investors, which is around 8,812 investors, more or less, are dominating around 25% of the margin trading in the market, with an average less than 300,000. But the problem is that you have only 88 investors. They are dominating 75% of margin trading. 88, with an average of 15 million each one. In reality, only 10 investors, 10, most of them in these companies, in which Faisal was mentioning at some time, who are intervening, 10 investors, they have 23% of the margin trading. 1.5 billion in the hand of 10 investors. Each one has 150 million. And in reality, when we look to the distribution of this kind of margin trading, the 6.5 billion, I will give you an example. The CIB, the margin is the CIB is 48 million. But you might find a very small company, they have a margin of 300 million, which is around 80% of their free float, or 80% of the market cap. And this is why recently we were really intervening, because we see something wrong. In reality, what I would like to see in the market, I would like to see a margin of a 75 to 100 billion Egyptian pound in the market as a margin. And this might be less risky than a market with a margin of 1% of the market cap, which is 6.5 billion, but with a very heavy concentration. So what we did actually with Dr. Azam is that we said, okay, guys, we are supporting the margin. We are pushing banks to provide margin to the brokerage firms. I even was talking to the governor of the central bank. I'm telling him that the market needs some sort of liquidity, and I would appreciate if you can provide margin to the brokerage firms. But the reality is that we need to be careful about it, because I would like to have a 75 billion or 100 billion margin, but with a certain kind of normality in distribution. So what we said, okay, every company who should have a margin does not exceed 25% of free float, and does or 15% of market cap, whatever is greater, whatever is bigger. And we put some sort of limitation on the maximum that every single investor can have a margin in a specific company. So if we really apply these rules, in which some people in the beginning said, okay, this will put some intervention, some sort of, no, it is not putting intervention, it's not putting control. In contrast, it is expanding the market, but it will be some sort of normal distribution happening in the market. So the margin trading is not concentrated on the hand of 5 or 10 people out of the 300,000 investors in Egypt. And it is not concentrated in 4 to 5 companies, very small companies that have nothing to do with the market cap, but in terms of the margin trading, they are dominating 30, 40% of the margin trading. So in reality, these rules and the regulations that we did put it, we did try to make a check and balance in the market to make sure that the margin is okay. We need to increase the margin lending in the market, but at the same time, we need to make sure that the distribution is for a bigger number of investors and for bigger number of stocks. So this is what we are trying to do about the margin trading.
Excellent. Next question is, are there taxation changes that are taken into account to lower the rapid turnover of trading shares by retail and broadly local investors?
Again, it's as Faisal was mentioning before, it's the market dynamics. Of course, we need to bring more foreign investors to the market. We need to have more institutional investors in the market. But again, it's the eggs or the chicken, because part of them, institutions would like to see a market with a high turnover. And in the meantime, this high turnover needs to have more blue chips companies, because actually in the last few years, we lost many good companies from the stock exchange by merger and acquisition or takeover. And again, I keep repeating what I said, is that having more companies to be listed in the market might provide some sort of feed to this market and could attract more institutional investors to the market.
Thank you. Next question comes from Mr. Karim Sawabini. Please go ahead, your line is open.
Karim, a long time ago.
Hi, Dr. Amran, how are you?
How are you doing? Moon Capital.
Good, good. And I had a quick... What's that?
You just disappeared after...
Well, listen, we're heavily invested in the market right now. So
I know.
But I wanted to ask you a question. There's a restriction in terms of the treasury shares. Companies can hold them for 1 year, right, and then either have to sell them back into the market or cancel them.
Right.
And obviously, there's an example in the market. Eastern company is having to sell aggressively in the market. They're approaching that 1 year limitation. Is there any way that the FRA, the regulatory body, can make it more flexible for companies so that they're not forced to sell into a very weak tape, and which disadvantages obviously the shareholders and the company in terms of forced selling into a market that maybe pressures it further?
Yeah, I wish I could, because I did try to help Esther Tobacco about them. Even I proposed to them to sell them to the holding companies instead of selling them to the market. I was just providing a solution. I don't know what they did by the end of the day. But the problem is that this is not in the hand of the FRA. It's a part of the company law, the law number 159. So in reality, if we would like to change that, we need to change the law itself. I mean, if you are as a, I don't know what is the best practice in that, but if it's the best practice in other emerging markets or mature markets that that you can keep the treasury stock for a period longer than 1 year, we can propose that to the government, ask them to change the law, and we can limit that only to the companies listed in the stock market, the trading companies. Well, I'm not sure. I did not look at it, to be honest, Karim, but we can look at it, and if any of you that he could help us with a piece of regulation in other countries in which they allow for a more than 1 year to hold the treasury stocks, we can do that and asking the government to change the law.
Okay, great. So maybe what I can do is, and maybe others, we can send you some material and maybe help out in terms of potentially changing that.
Please.
Okay, great. Thank you.
Thank you. Dr. Amran, one of the other questions we received was about the FRA asking or requesting IFA valuation in reaction to stock price movement. Some of our clients actually raised concerns and considered that in that case, this is an interference with supply and demand dynamics and its impact on stock prices. Also, there were questions about the quality of the IFAs that are being released. You've just mentioned an example. For example, I have another example about, I think it was a sugar company before related to OIH. So sometimes the released IFAs themselves are not really reflective of the true financial situation. So would the FRA consider not requesting IFAs in relation to stock price movements? How do you see that topic?
You're right. It's again about the market dynamics. I myself believe in a market dynamics, and I mean, there are some circumstances, Radwa, that you need to take an action like that. For example, and you might understand, you are from Egypt and you see what happened with one of the stocks in which one of the major shareholders were trying to bring the stock down every single day by 10 to 20%. A stock that lost around 60% in just 7 or 8 trading sessions with no reason behind that. And then we have the Article 34 from the listing rule that asks the regulator to ask for a fair value valuation. And this fair value valuation, by the end of the day, it is not to ask the investor to trade at that price, but only to tell them what is the real value according to the independent financial advisor report. So in reality, it's some sort of transparency and disclosure in the market. So when you find a stock that is going down or going up by 50% or 100% or 200% with no reason, while the entire market is moving in the different direction. So what you would like to tell them, hey guys, investors, I do not intervene in this issue, but listen, this is a financial advisory board about the value, the economic value of the company, but you are free to trade whatever you would like to trade as long as there is no manipulation in this issue. So in reality, since we have this article back in 2016, I guess, when the ex-chairman of the FRA did take this decision, I can recall in this 6 years or 5 years until now, I can recall we have like a 12, 13 cases, if I'm not mistaken, might be, I do not think they are in more than 15 cases. And these very clear cases in which you find a direction of stocks with no single reason. Sometimes they are moving 400%, 500%. Sometimes when you look to the price earning ratio, it's 1,000, 2,000, 3,000. There is nothing in the market about the value of the stocks, but a bunch of investors, small investors, they are trying to move the prices ups and down for a certain reason because they're for their own interest. And the reality, well, let's be honest with this. This is only happened more or less in a very small companies, even in terms of market capitalization or in terms of value traded. And to be honest with you, every time this has been done, people realize they were trading the stocks beyond the fair value, but several times. Again, when we do that, we do not ask investors to trade at these prices, but we're just telling them, listen, this is an economic report about a company, trade whatever you like to do that. But in the meantime, I'm trying to limit that to the minimum. For example, I have a case now with the market. The stock price was like a 3-4 pound. Now it's 70 pound. It was just 60, became 82, just in 2-3 weeks. So either to cancel the trading or to stop trading, like sometimes in the US, they do that actually. The United States, they have done that several times when they have no reason about the stock price movement, might be when it go more aggressively than us, but sometimes they intervene. But in the meantime, we have the Article 34 that gives the regulator, we do not intervene in this case about the prices, but we ask the company to recruit an independent financial advisor to issue a report about the fair value of the company. And then they disclose that in the screen, and then the people are free to trade wherever they like. But about the quality of international financial advisor, if you remember, like a couple of years ago, we make some cleaning up the financial advisors that they are listed in our register. Here is the Financial Regulatory Authority. I think it went down from 80 something. Now we have like 28, and we are very keen not to intervene about the price of the report, but we intervene to discuss with them about the methodology they use it to determine the fair value. We are not about the value itself, but about to make sure that the independent financial advisor did respect the rules and the regulations that issued by the board of directors of the Financial Regulatory Authority.
Thank you. Next question comes from Mr. Karim Sawabini. Please go ahead.
Yes.
Karim, so has the right to ask more than once.
So, I was going to make a recommendation. Leno, there's a bunch of us who can speak Arabic and can read it and understand it. But for a lot of foreign investors, especially if the goal is to attract a lot of foreign investors that have left the market or had to reduce their positions, Anna, the one thing that I've always noticed is a lot of the companies, when they disclose to when the exchange publishes material, it's obviously always in Arabic, which makes sense. And I think it would really help if there was a requirement, especially among the EGX 30, to also publish in English. Leno, I think a lot of investors who don't speak Arabic, they either have to wait on the material or have to call the companies. And if you're trying to attract more of these foreign Western or foreign investors outside of the GCC, I think it would go a long way to helping. It's the EGX 30 names can afford to do it. Obviously, the smaller companies, it's an additional expense. But for the larger companies, I think it's something that would be very helpful, because I know that it's an issue for a lot of investors when they see these headlines and they can't read them.
I think, Karim, there are many companies in the EGX, when they issue a press release, they issued both in Arabic and English. I'm not sure, like CIB, like Global Telecom, when it was in the stock market, Swedish cables. But this is a good idea, Dr. Azam. We could ask them to, I do not like to put it as a prerequisite, like a part of the listed requirement, but we can send them a letter saying that when we have a conference call with different investors, foreign investors, you really recommend for that. I mean, I can do it from the listing requirement as a prerequisite, but I do not like to intervene that much in the company's decision, because some companies said, okay, we are in the EGX 30, but we do not have any foreign exposure to our company. But I think it's good, Dr. Azam, for us to send them a letter saying during our conference call, blah, 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 we do recommend you to issue all your press release in Arabic and English.
Yeah, I mean, I don't think it's a coincidence that the companies that are most heavily owned by foreigners happen to also publish in English, right? So I think if it's the intention or the desire of the FRA and the government, and I know it's also the government's interest to attract more foreign capital into the stock market, I think it would really help, because look, there's a lot of very cheap companies in Egypt right now. There's a lot of well-run companies. I think a lot of them are ignored because people can't understand the financials unless they wait 4 extra months to get the audited English financials. So I think if you're able to reduce that timeline, it would really help a lot of people looking at more companies than they do today. Because right now, like you said, it's only a small group that do it. And those happen to, it's not a coincidence, they happen to be the most heavily owned by foreigners. So I'm saying if you want to broaden it, I think it would help, even for the companies, because the valuations would go up theoretically if more people own them.
Okay, Dr. Azam, we can send a letter to the entire EGX listed company, whatever they're small or big, and just to encourage them to do that and see what the reaction would be.
Okay, I will. Sure.
Okay, very good.
Thank you. Mr. Saubin, you have any more questions?
No, I'm good. Thank you.
Would like to remind our participants, if you have a question for Dr. Umran, please raise your hand so I can open up your line. There is room for one final question. And
Radwa, by the way, I know that all investors with us now, they have interest in the capital market, but it's just nice just to mention them. They might, they might give this statement to their colleagues that the Financial Regulatory Authority is not just like the SEC. We are regulating the entire non-bank financial institutions. So actually insurance is under our supervision, mortgage finance, leasing, factoring, microfinance, small and medium-sized enterprises, as well as consumer finance. So if any of you or any of your colleagues within your company would like to discuss anything related to investment in the NBFIs, we will be happy to have them.
Excellent. The next question comes from Mr. Rami Saidani. Your line is now open.
Hi, Doctor. It's Rami Saidani from Schroders. Hope all is well. Thank you for your time today. Doctor, my question is, as you mentioned, we feel that there has been a structural issue about the market, and I think a lot has been discussed already. It is unfortunately a market that's dominated by retail investors, and there's lack of international interest, which hopefully with time it will come back. But I feel one of the issues that we're facing today is that even institutional money in Egypt, which is a relatively meaningful pool of liquidity, is behaving like your typical retail investor trading on the market on short-term basis. And whenever we ask about this, we get the feedback that local asset managers are actually ranked on a weekly basis by the government funds, pension funds, and so on. And this is how basically they get their AUMs accordingly. So this has been a structural problem, and it's prompting them to trade the market on short-term basis and play games against each other. I don't know if you are aware of this system, which in a way is counterintuitive and would push investors against any kind of long-term strategy. But it is something I think that the government or whoever is dispersing the funds to these local asset managers should be aware of, and should be advised about the damage that this is actually creating, as I said, prompting these asset managers to invest on very short-term basis.
Thank you, Rami. Very well-noted point. And I myself did notice that several times. And again, but the regulator is very hard to talk with them about their behavior as long as it's within their contract. But it will not hurt, Dr. Azam, to ask them for a meeting and bring them and discuss this point with them. And if this is a kind of contract in which I believe it is, we can talk to the government itself, pension fund, whatever it is, and try to to put in place. I'm not saying restrictions, but at least some sort of understanding that this asset management, they should not behave like retail investor hit and run every week or every day, but they should have some sort of contract with the pension fund or whatever it is, or in government institution based on a long-term contractual agreement. But again, Rami, you are quite right. Is one of the issues that do bother me personally when I see them. They are behaving like retail. And
yeah, typically, usually, I mean, the performance of asset managers should be measured on let's say an annual basis, and this is how maybe the funds should be disbursed. But when they are ranking them and on a weekly basis, then it becomes a silly game that unfortunately we've been seeing its effect on the market.
Dr. Azzam, Islam.
Doctor.
I think this is a very, very valid point, because you see yourself on the screen how the behavior it is in the Egyptian market, that you do not find any big difference between institutional investors and retail investors in terms of the reaction to any incident happening in the market. And
Dr. Amran,
yes,
we have a comment on that issue from Mr. Ahmed Abu Saad, the chairman of Azimut Egypt. Mr. Abu Saad, the line is open.
Thank you, Radwa. Thank you, Dr. Amran, for making this time. And thanks for these useful questions. And honestly speaking, I just want to comment on Rami's point, which is, yes, it's a very valid point, as you mentioned. But again, I need to, previously in the first questions, we were talking about the free market movement. And now we want to make it more stricter to asset managers. I do agree that sometimes putting the asset managers under the pressure of weekly ranking or weekly rating, or how this, but no decision is made on week by week basis. Actually, it's at least a 1 to 3 year fiscal period that an asset owner decide whether to add with an outperforming manager or to reduce from an asset owner manager. But let me tell you that the problem really, which what I see, and this is part of the working paper that we submitted to the FRA as the Egyptian Investment Management Association that is in charge of the local asset manager, that definitely the asset owners, the big government entities and quasi-government entities, that the big asset owners, they need a little bit of, if I can say, more of education, awareness, and we do this as part of our advocacy effort. And honestly speaking, I think if something like this is done under the endorsement and the sponsorship of the FRA, it will be really very important. So I share with you the same concern, but just wanting to highlight that no action is based on this. Another important point is that this institutional money, local institutional money, they didn't witness any growth in the last few years. So you cannot see, like, for example, like local pension, private pension, or commercial banks or insurance companies increasing exposure to the market, which is really a matter of concern. And again, I think it's part of the overall educational or awareness that, honestly speaking, I see a real importance to launch this initiative under the endorsement and under the sponsorship of the FRA. Thank you.
Mr. Abu Saad, thank you very much. Dr. Islam, we can have a brief discussion with Ahmed after the meeting to see how we can have like a meeting here in the FRA to, to talk about this issue and to bring the government entities and to see a way for increasing their understanding of how the asset manager they have to work and how to to give a positive impact to the market at large. As of the issue about the insurance and the pension funds, actually we are discussing now in the parliament the new insurance law. It has been approved by the cabinet of minister, and now it's a very big law. We have 217 articles. I think now we're in article number 40 plus. So I think during this summer we might be able to have the new insurance law approved and issued from the parliament. And I think there are certain issues dealing with the investment policies for the insurance companies as well as for the private pension funds. I hope this law will give some sort of understanding that a good amount or a good percentage of money under investment, whether in the insurance companies or the private pension fund, to move from the banking sector to the non-bank financial institution, particularly in the capital market. Radwa, you are off, Radwa.
Mr. Abu Saad, you wanted to add something? I see your hand is raised.
It was okay. It was just raised from the first time, but again, as I previously spoke with Rami and with Ajiz and with others, I think I conveyed your concerns again to the large asset owners, and honestly speaking, this has been trying to change it in the last few months, honestly speaking. But again, with the endorsement of the FRA, it will make a huge difference, especially that we know that some entities like Egypt Post, or like the social insurance, which is the public pension fund, that receives almost 150 billion a year installment from the Ministry of Finance, but not one single pound is added to the market. So that's a really a point that we need to work on. Thank you.
Very good.
Thank you. At this point, we don't have any further open questions from our participants. Dr. Mohammed Umran, Chairman of the Financial Regulatory Authority, and Dr. Islam Azzam, Deputy Chairman of the Financial Regulatory Authority. We would like to thank you so much for your time and for your transparency and openness to the discussion today. We'd like also to thank all of our participants for taking the time to join us today, and let's hope that the discussion would open up new venues for the Egyptian exchange and the Egyptian market, inshallah.
Thank you very much, Radwa. Thank you very much, everybody.
Have a lovely day and stay safe. Bye.
Thank you.
Bye-bye.